Hi everyone, thanks for checking out my channel. Going to have a look at a few commodities tonight, just checking what happened over the past few days and what will likely come ahead of us for the next coming days. So starting with WTI crude oil, um, I was looking at shorting this from the 35 level, and we got that price move very close. That was on yesterday, and on that rejection candle I've started to build short position here and added when we actually dropped lower to 33.5, so not ideal entry, and I held onto the position up to 34 and then sold on the spike down we had today, mainly because on the 4 hours we got the 50 MA that came in here, but also the 200 MA when we got some strong buying pressure returning. So I think for the moment the buying pressure is still probably too important to actually allow that to go much lower. So decided to close that position and look at the chart and see if I can get a better entry point. At the moment, that trend line here is very interesting. It's capping the price nicely, and now we have this potential trend line that we might have a look at. But we definitely have some support underneath 33, so we'd expect a new visit to 34 and having that trend line on the RSI, that we should be touching 57 here. It should be around 34.5 should we return there. So yes, I'll be looking at potentially a triple top on WTI and reloading short. As for long position, I think it's a risky now because we are still having open interest dropping on the July and August contracts, and basically position moving out to September or even October, which is not a good sign in terms of the expectation for the future price to actually increase much in the coming weeks or months. So I think long position are to be avoided now, except if we go and break significantly above 36 with volume and everything. But I'm not too confident that will happen. Rather a larger correction to the 29-30 level is, in my opinion, more likely. Moving to natural gas, wasn't expecting the chart to actually jump up here so early in the week. So definitely that plan where the price were to drop to the trend line is invalidated because of the gap up we had. And on that move following the gap we had quite a nice breakout on that level, reaching 194 and then another one to 197. At that point we set divergence on the, I think it was, yes, on the hourly chart. I would disregard the first one as it was a jump due to the new contract, so that gap is that divergence would not be valid, but the second one here from 192 to 197 is definitely valid. So I opened a short position here to hedge my long that I did close on the 50 MA today, and we let that running a bit further, hopefully for another test of the 197. So here, so the trend line of course is not valid anymore, and I will have another short position triggering should we break below 190 for a potential visit of the 185 level. The gap will be hard to fill, my opinion here. Of course it's always possible, but I believe there's almost no contract left in the June contract. So something like probably 1000k or 2k contract, and the open interest keep on increasing on the August and September or July and August, sorry. So yes, should continue to move up, and of course always be careful. Natural gas can move very quickly, but that looks relatively positive to me. And yes, the divergence that we have in here could open the door definitely for 85 test to clear the divergence, then we can remove return to the move up later on. Looking at gold, we had really interesting move today. I was looking at adding to my long position on gold, where I'm sitting at an average a bit higher on 1730 dollars, and I was looking at the 50 MA on the daily chart. It's correct. And on that important level, the 1680, that's been working well to hold the price previously. So as usual, starting the week here on the 25, yes, we had 2 days of price drop, which is quite usual beginning of the week for gold, and then we had that nice bullish candle and from hammer that will actually very likely now get another one or a few more to come back up and test the 1780 level. So we'll hold that position, stop loss unchanged at 160 $16.50 just in case it does break down, because the next support zone is lower at 1570. I would definitely return to long position in that area should that trade fail. And finally, looking at coffee, so we had also interesting setup today. So we are still on the 1 hour chart on a very large divergence here, and we keep adding to that divergence here with the move we had last week down to 102, and now we dropped lower slightly below 102 today and set another divergence on the 1 hour. So to me could potentially be at the end of that downtrend. Of course nothing can be said for sure, but going back up is likely at this stage to 105. That's been serious resistance over the past few days, and potentially another drop down that could go and add the new divergence on 100 before we can actually get some more accumulation and break higher during winter. June will be potentially bullish for coffee should we have some weather event helping, so definitely be trading for that, keeping not too close but still not too far away stop loss ever. So 97, should we break that level, could actually be probably not safe enough to actually keep into that trade. So yeah, that's about it. Wish you safe trading. Have a look at this commodities again over the weekend, and wish you good trading success, and speak to you soon. Cheers, bye.